Yo, what's going on YouTube? So I just wanted to make this video. I didn't trade today. It was NFP, as all of you probably are aware. And this is how all the news came out as far as Forex Factory goes. So we do see on this non-farm employment change that the news release was bullish for the dollar, which is supposed to be bearish for the indices. Now, one thing that we've noticed in our Discord trading together, we oftentimes reference the DXY or the dollar index, and we've noticed that in this season, the dollar has more so actually correlated in, congruence with the dollar. So if the dollar is going up, we're noticing that the indices generally are going up with it, and vice versa. So that's something that's interesting. And then obviously unemployment rate came out at 3.7%, which was higher than expected. So that is also actual less than forecast is good for currency, which aka if less than forecast is good for currency, this came out worse, which should be technically bullish on the indices. But again, it's kind of conflicting because the dollar actually has been correlating with the way that the dollar has been moving. So to me, if you were going off of fundamentals alone, I don't know. To me, that's not like the most surefire way that you could have gotten your bias for the day. And to me, the bias that I would have had coming into today, again, I said I didn't trade, so I'm not sitting here claiming like, oh, I would have won or anything. I mean, I would have based on the strategy that we trade. But let me show you how that bias makes sense. So if we come out here to the weekly, I'm going to keep my drawings on the chart. So, forgive this clutter over here. A little bit noisy, but essentially we've had this weekly liquidity void, this volume imbalance for quite a long time, and we were hanging out in this wick obviously at the later part of this week, and now we finally have pushed into this gap, but this gap was still completely open coming into today, and that's what this gray zone is indicating for me, is that liquidity void. So coming into the 9 o'clock hour, which is the hour that we're trading on our sessions, we saw NFP come out back here, created this huge chop, this whipsaw in the market, took out buy side, took out sell side, pretty much all in a matter of a couple of minutes. It did this, and then during opening bell, price rallied higher, but it left that liquidity void open still. So because of that, you could have maintained your bullish bias until this objective has been traded into, which now it has. But essentially what you see here is price sells off, kind of corrects a lot of the opening bell move, takes out opening bell, opening price, takes out these lows, and then starts displacing higher. Now your first entry opportunity during this hour would have came on this 3-minute fair value gap. You could have looked at this as a liquidity sweep right here, targeting this buy side, this weekly gap as well, and then the 3-minute gap would have been your only entry opportunity. It did give a 1-minute gap right here, but it never got traded back into. And we'll look at the 2-minute. There's a 2-minute gap down here as well, but again, didn't get traded back into. So the only way you would have been able to catch this would have been on this 3-minute time frame. So price comes down, taps into it. Let's say your entry was right here. Let's say your stop loss was below the candle. Price goes up, gives you about 10 handles into this 3-minute gap, and you're at least probably taking a partial here. And then worst case scenario is you've removed your risk, price comes back down to the gap one more time, and you're most likely out at break even if you've protected your entry at that point. So from that point, if that was the case and you got stopped out, there was one other opportunity for you to re-enter the market, which was this 1-minute fair value gap. So if you would have been paying attention, you got stopped out at break even, you're watching as price continues to work back to the upside, and you're thinking that this objective is still very much in play. We still have this buy side now engineered right below it, right? So you could have very easily set up your position a couple different ways. You could have done the beginning of this gap like so. You could have, with your stop loss, if you wanted to put your stop loss below here, you could have. I personally wouldn't have. For those of you guys that have been following my channel for a bit, I prefer to create a position that has 5 handles or less. So let's say I really wanted to be below this low, that's totally fine. what you could do then is you could then be a little bit more stingy with your entry point and say you want to go about 50% of the gap, getting that stop loss down to about 5 handles. That's what you could do. Or you could enter off the beginning of the gap and just, be willing to be a little more stingy with your stop loss placement than maybe putting it below this candle sequence by a tick or two, and then at that point you'd have about a 4-point stop loss. But it's really kind of up to you and your risk tolerance and what's better for you in terms of, do you want to be below this low for just complete safety? If so, totally fine. And in this case, price ran up, grabs this buy side. You could have taken a partial F5 handles as well, which would be right here. If nothing else, you're most likely removing risk at 5 handles or right at this high, right here at this 3-minute gap. Buy side, weekly objective, and then anything beyond that is really just a bonus. You could hold if you anticipate this entire gap being filled, whether it's today or whatever the case is. But this would have been how we would have approached the market today, because I would have stuck with my bias. I've been doing that a lot more recently, unless we really are truly neutral with what I feel the next draw on liquidity is. If I'm uncertain about the next draw on liquidity, I'm more so just willing to play whatever market gives us during this hour, and wherever the setup comes, I play it as it lies. kind of an approach. But I don't prefer that. I do prefer having a higher time frame draw on liquidity. That makes a lot of sense. And to me, coming into today, I saw, NFP this open, and to be honest, I just kind of decided that I'm just gonna sit out and I'm gonna sit on my hands. We had an amazing day yesterday, hit all of our take profits. So to me, it was just, I'd rather just give myself the extra day off. It was already a short week anyway, and just watch and learn. And this was definitely cool to see still that price, delivered exactly what I would consider according to plan. And hopefully by me just going over this was helpful. I would say stay tuned. I am planning to do another ICT Silver Bullet case study video where I go over all the days of the week and just how Silver Bullet performed during AM and PM session. So stay tuned for that. I'll make that a little bit later today and I'll have it uploaded. But this is how you could have played this today, and it definitely gave a really great move thus far from that gap, a potential of about 23 handles from the beginning of the gap to current high as of me recording this video. But let me know if you guys traded today. Let me know if you guys caught any of these moves. Definitely were a couple clean setups that you absolutely could have capitalized on. But as always, hope this was helpful, and I will see you guys in the next one. Peace out.